I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, natural resource specialist at the Oxford Club. His website, investmentu.com, you being the letter U. Welcome to the show, Sean.
Thanks very much for having me on.
Well, you're down in New Orleans there for the investment conference, at the New Orleans Investment Conference. Anything good happening there? Well,
first of all, some of the nicest people live in that city. So I have to say that it was really pleasant to actually be there. I had a wonderful time. And yes, the nice thing about that conference is it's big, but not too big. So, after every speech, and I was one of the speakers, they had these small groups where people could actually meet with the speaker and give individual questions. And so I found that extremely useful, but besides my speaking and like being on a panel, what I did was I scheduled one-on-one time with all sorts of people, whether they're explorers, developers, miners, you name it. And so I really got some good information that way, along with speaking to the people who just attended the conference. I have to say, people seem to be feeling a little more bullish. I think after this long of a bear market, they think it has to turn sometime, you know.
Of course, a lot of people are asking me, was the correction August 24th the correction of the fall? I mean, usually those things happen in September or October, and now we're past those points. Is that the last bad news we're going to hear for some time?
Well, actually, as you and I are talking, we actually got some some might consider bad news this week, which is that Janet Yellen says that the chance of a December interest rate hike in the U.S. is a, quote, live possibility, unquote. Now, if you're going to look in your phraseology dictionary to try and figure out what live possibility is, I wish you luck. I'm not really sure. I guess, it's different from a dead possibility. But here's the thing. I don't think anything has really changed in the last couple months, if anything. Some of the news that has come out is actually a little more grim. I'm not saying recession-worthy. I'm just saying that we aren't really seeing any traction. Partly it's because of the slower global economy dragging down North America. North America actually looks pretty good compared to the rest of the world. But, with the rest of the world kind of misfiring, it kind of drags us along. And I know that's one of the reasons why the Fed didn't raise rates when it had a chance in October. So, to me, this says that Janet Yellen is just raising up the possibility on the hope against hope that actually things really improve. But unless they really improve between now and the December meeting, there won't be a rate hike. So I would guess that we will get to December. She'll be disappointed yet again, and so there will be no rate hike. That's how I would see things playing out. But the market really worries about it, and this will hang over the market. Maybe not all the way through December, but it has to be priced in. And so that's the kind of thing that can really weigh on things, and we'll see how that works out.
Well, by saying live possibility, is she trying to create a run on bank loans while the money is still cheaper?
Maybe that's one thing she's trying to do. I have seen recently that auto loans have really jumped. People are actually getting a lot of auto loans. And if you're buying a car, you really can't buy a house, and what they'd love to do is get the housing market back on its feet here in the U.S. I know up in Canada it's a very different story. You have everyone from China coming over to buy a house. I don't know where all you Canadians are going to live, but that's, something else. So they would like to see the U.S. housing market improve some more, and maybe that's what she'll be watching. So watch those housing numbers closely. But with the big jump we've had in car loans recently, I think the average car loan in the U.S., by the way, is about $28,500, which seems stunningly high to me, but I guess people are, since gasoline is cheap, they're spending more money on their cars, right? So that just tells me that she may be disappointed when that thing comes around.
In Canada, we've just set a record for automobile sales as well over the past year. So, cheaper oil, buy bigger cars.
Yeah, and actually there's a funny thing going on since you mentioned that, is like, because people were looking at cheaper oil and how that has shut in some production, right? So they were hoping that would actually raise prices with some production being shut in, especially in the shale oil fields. But now, global oil prices have gotten so cheap that refiners on the East Coast have found it's cheaper to import oil again, even including the tanker costs. It's cheaper for them to import oil, so they're actually refusing oil from the Bakken, and they're instead taking oil that's imported from, I assume, Nigeria and like places like that, and taking all that oil in, which keeps more downward pressure on oil prices in North America. But just speaking about that, we're not the only ones suffering. In fact, OPEC put out what was supposed to be a confidential report, but which became unconfidential pretty quickly, that says that it expects pressure on oil prices through, or I should say into 2019. I don't think they even know at that point. You really kind of guess. But they think things could actually stay lower for longer than even I was expecting. My expectation was 2017. Now, we're all guessing about the future. We're all taking an educated guess. I'm not sure where their pessimism is really coming from. Probably more production out of Iraq, more production out of Iran, and that kind of thing. So we'll have to see how it goes. But if they're right, then in that case, we could be talking lower for longer for not only OPEC, but for North America as well. And that might have to be something that we all figure into our new figures.
Sean, going back to the conference in New Orleans, was there any one hot topic that people wanted to know more about?
Well, I was speaking about oil, and I had plenty of questions about that. But I also gave picks for companies that are okay to buy now because they pay fat dividends and can support those dividends at recent oil and gas prices. I did get a lot of questions on gold and silver. I was hoping people would ask me about lithium, but I'm really not getting a lot of questions about that, even though I like some lithium producers quite a bit. Gold and silver, though, they really were asking questions about trends and like stuff like that. So let me share a little of what I shared with like New Orleans, is that we're coming into what should be a seasonally strong time for gold and silver. Just that's what we see year after year. However, they've had a weak monsoon in India, and India is a major source of buying for gold seasonally. So that doesn't mean bad news necessarily. That means the jury is still out because the monsoon can improve. People in India can buy for other reasons, or else people in China can just go to town and buy a heck of a lot of gold because seasonally this is when they buy too. So that does raise the yellow flag. You have to keep your eye on it. Personally, though, I see a lot of bullish things for prices, including the fact that we are just seeing some actual metal producers shut down now. We've seen it happen in zinc. We've seen it happen in copper. And one thing about those zinc mines and the copper mines is some of them produce precious metals as a byproduct. So that comes off global production as well. So there's actually a lot of forces in the global market right now. And certainly it's leading to extreme volatility. Maybe not as bullish as I was a little while ago, but I still would like to see how things actually play out because we are in a seasonally strong time for gold and silver, and that certainly can't hurt.
You said you were hoping for more questions about lithium. Well, I have one.
Sure.
Do we have enough lithium to meet this future demand for electric cars?
Well, we do, but it's not developed yet, which is where the potential is. I think there are some current producers rather than the explorers and the developers that could actually do extremely well. And that's actually a big change. And also they're talking about new batteries. There's new battery technology. Everyone's trying to prove it. They have their own different way of like actually dealing with something. That would be 10 years down the road, really. But yeah, I think lithium, if you can find a lithium producer rather than a lithium explorer, I'm not keen on lithium explorers because maybe they'll work out, maybe they won't. But I think that the lithium producers could actually see some real demand ramp up, and things could be quite good for them.
Where is most of the lithium, or is it spread all over the place?
Well, it isn't spread all over the place, but there is some in Asia. There's plenty down in South America. One of the developers is in Nevada. So, I mean, it's hit or yon. It's not exactly a rare metal, but finding a good-sized deposit that you can develop economically, just wasn't worth anyone's actual time for a while, and now everybody wishes they had that deposit. Isn't that always the way it goes in metals? I'll tell you.
Well, I've heard because the shutdowns in zinc are because the three largest mines in the world are preparing to close because they've run out. Are there any big mines out there to replace them?
Well, there are mines in development, and this is one of the things we keep hearing, and this is another thing I shared when I was in Lake New Orleans. Two potential shortages, let's just say that the people are watching for next year, one would be in zinc and one would be in nickel. And so, will we have those shortages? You know what? Sometimes, just as prices go up, people start to sell stuff out of stockpiles. Are there enough stockpiles to cover? We're really not sure. So I think that I would watch those metals. Definitely watch lithium. But in the base metals, those are the kind of things you really want to watch. Iron, on the other hand, iron producers seem to have just gone into some kind of suicide pact to see who can outproduce each other. I mean, it's crazy. It's crazy how much iron is being produced. It's nuts. And so I would not be bullish at iron in these circumstances any way that I could see it.
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Sean Brodrick. China's president is predicting that they'll have 6.5% growth for every year over the next 5 years. And can we trust those numbers, or can we trust any numbers produced by a government?
Well, I know many people say you can't trust any numbers out of China, and that's a good example, right? I mean, because, first of all, how can anyone predict with certainty what your GDP growth is going to be? There's so many variables in that looks on its face like he's making it up. However, before you bet against China on this, and there are reasons to bet against China, by the way. I have seen people ratcheting down predictions on Chinese growth. The most recent quarter was like 6.9%, and we've seen 5% floated by a bunch of the big banks. Someone else recently put out 3%, and then some European banks said 0%, which would be stunning. Stunning. I think that's too low, but maybe they'll be right. But all right, so let's just take it on its face that no one really knows how much China is going to grow. But I would also put it to you that China has trillions of dollars in foreign reserves. And if things start to look bad, they aren't going to sit on their hands. They will spend money like you wouldn't believe. So you could go broke betting against China. That's not saying that it can't happen, but it could be really, really kind of tough. You might leave that to the big dogs. There are other things that are really good about China. I mean, when you look at Alibaba and like stuff like that, there's still plenty of growth for like stocks like that. It should do really, really well. That entire country is like still making the transition to like mobile devices. I mean, I know that my wife shops on her phone now all the time, but actually that's not as common as you might think it would be over in China. So when you see this real potential there, there's still room for a lot of growth in China. Maybe not in railroads, but in things like, mobile internet and like stuff like that, there's still plenty of room for growth. So I would be wary of betting against China at this point simply because they have those huge cash reserves and they will use them if it comes down to it. And if you've just heard me talk and you say, well, he's full of it, I'm going to bet against China right now. My best wish is to just realize that you are taking on the deepest pockets on Earth, and that could get very expensive. Oh, let's talk about something else, though, which is that OPEC nations, if prices stay as low as they are through 2020, I was reading this 2 weeks ago, and it just clicked with me today with this new report from them, right? If prices stay this low through 2020, it's expected that OPEC nations will lose $1 trillion worth of income that they had been planning to have, right? How are they going to cover that? How can they possibly cover $1 trillion worth of expenses that they plan to do, because many of them have big social programs and stuff like that? Well, one thing they might do is many of them have national investment funds, right? And they own a lot of stocks. They own U.S. stocks, they own European stocks, they own Asian stocks. They might start to sell those stocks not because they want to, but because they have these bills they have to meet. And so we were speaking about, things that could potentially pressure the market. And this would be kind of a longer-term thing. This would be every time the market rallies, those OPEC nations might say, you know what, we have this investment fund that's holding these U.S. stocks. We've seen a 5% rally in the stock market. Let's sell some of that stuff now because we're going to need the money, and we certainly aren't getting it from our oil wells. So that's something else that we need to be watching right now, because that report, I believe, was from the World Bank, making an estimate on how much they were actually going to lose, over the next 5 years. And now OPEC has come out and said they're expecting low oil prices through 2000 or into 2019. That's kind of fulfilling what the other guys were talking about. And that could be a problem for the global market, simply because they might have to sell things that they own in our markets, which they'd rather not sell, but they simply have to.
Does that mean it would drive the market down, or would that be an opportunity for people in North America to buy stocks at an affordable price?
Well, both. It would drive the market down, which would be depressing. But, that's the whole thing of it. The way to make money in this market is to buy when other people are selling, right? And hopefully not go broke before things turn up again. Because I know some people in the junior mining space who have really gone broke, trying to guess when the bottom will be in that, right? But, let's supposing the big blue chips go on sale, that people aren't going to stop using stuff. There's at least 300 million more people in China, at least 300 million more people in China that are going to join the middle class over the next 10 years. And it could be much higher. It really depends on how things go. And once they join the middle class and they want everything we all have, that includes washing machines and air conditioners and stuff like that. So I would look at any big sell-off as a buying opportunity. It will take nerves of steel to buy, but that's one of the reasons that you have some cash on hand. So when those big sell-offs come, you can take advantage of it. And I think that buying dividend-paying stocks that can support their dividends in whichever business they happen to be in at whatever recent prices are, that's the way to go. There are some things that get too cheap for a reason, but there are other things that are sold off the way babies are dumped out with the bathwater, and you know what? They can still be great, great stocks. I just gave my Oxford Resource Explorer subscribers 3 picks along that line, because I think that in some parts of the oil patch, there are stocks which look great. They pay fat dividends, and they can keep going at recent prices, and they should be fine. Now, I might be wrong, and we'll see how that goes. But you know what? You get paid to wait when it has a nice fat dividend, too. So that's always working in your favor.
I always wonder, at least here in Vancouver, there's a huge gap between what we pay at the pump, very high prices, and what they're getting in the oil patch. Is there any way to get that saving passed through?
Well, only if you buy refinery stock. That's the thing, right? In the recommendations we have for Oxford Resource Explorer, the refineries are doing well. They're doing well. It's not a monopoly, but it's as close as you can get without having something. For example, on the west coast of America, what they're paying is nearly double what I'm paying here in Florida. And it isn't just due to local taxes. Now, there was a fire at a refinery out there, and we're also in the shoulder season where things, move over, so some refiners shut down. But for some reason, maintenance season seems to be taking a lot longer than it ever did, right? And also, you and I have been talking about how both in Canada and the U.S., people are using more and more gasoline year over year, right? Well, that's more demand. And yet, it's not like they're building new refineries, so that kind of limits supply. So, yeah, that's going to push things up. The refineries are still a great place to be. Many of them pay nice dividends. You have to be picky. But I'd especially look for those that sell into areas where the prices are high and that can import not only from their own countries but also overseas, because that's what we're seeing on the East Coast now. We are seeing those refiners look at all things, and the cheapest supply they can find is to import from overseas. And so I think that you really have to have a refiner with some flexibility, but that is a good play in this market.
Well, I've heard in London they've seen signs of the cutbacks in OPEC. The sheikhs, instead of landing in a 747 and dropping off 15 gold-plated Rolls-Royces for their 30 wives, they're now cut back to 737s. They rent a golden-plated car, and they only bring 15 wives.
Well, we all have to cut back somewhere, I guess.
One is enough, I think.
Oh, yeah. For me, too.
Sean, thanks a lot for chatting with us.
Hey, it's always great to stick with you, and have a great November, and I hope things go well.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.